In this listener-led episode, we're diving into your most pressing property questions, from navigating shifting streetscapes due to redevelopment to building homes with future value in mind and the big decisions facing investors and families alike. We'll be unpacking your real-world scenarios with our practical advice and market insights.
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
Hi, I'm Chris Bates, mortgage broker, currently ranked number 3 in the MPA Top 100 Mortgage Broker Awards. Before we get started, everything we talk about today is not personal advice, and we recommend you engage the services of a licensed and experienced professional.
Today, we'll tackle your questions, and we're going to be traversing quite a lot of ground, from what zoning changes and medium density developments mean for Sydney's character suburbs, what really makes a home A-grade beyond location and land size, and how to build with both resale and rental appeal in mind, increased options for first home buyers if and when price caps are raised. And for investors, we weigh up capital growth versus rental yield in the accumulation phase, whether a positively geared property under $600,000 is still realistic, and how to avoid FOMO-driven decisions in overheated markets. Plus, we address a classic dilemma for a growing family. Is rentvesting a smart strategy, or is home ownership still worth chasing in a priced-out area? All right, our first question is from Elise, and she has come in via our website and recorded this for us. So over to you, Elise.
Hi, Veronica and Chris. My name's Elise, and I absolutely love listening to your podcast every week. Look, I was curious to learn more about the impact of all the zoning and development going on in Sydney, and the heritage and changing streetscapes. There has been a lot of talk about all this development and building up, but the question about the character and heritage of suburbs and street has not really been addressed. Would you perhaps look into having a conversation about this? I'm not sure of any experts that you could interview. However, maybe that would be something to look into. Looking forward to hearing all about it. Thanks. Bye.
Elise, it's a very good question. And to be honest, I think this is a bit of a moving ball that we're trying to sort of understand. It's, I'm a bit shocked that even the policy came out at first. I mean, it makes so much sense, but it was pretty brave for Chris Minns to do that. And I think it's, I guess each council is sort of fighting back a little bit. I think even this week, the Kurungai Council have come back with altering the plans to what the state government were suggesting and saying, hey, we don't want to do it on every station. We want to do it on a few stations, and we want to go a bit higher than we do want to go. And we want to do it on 3 stations, not say 6 or 8. You know what I mean? So I do think it's one of those things where we're just trying to figure out how it's going to play out. But it's such a big change, and it's either going to improve the livability potentially for certain suburbs if you're far enough away from that and you've still got a beautiful streetscape and heritage, and you can access all the better amenity and the better, cafes and restaurants and potentially upgraded train stations and blah, blah, blah. But I do think for some people stuck in the middle there that maybe you're going to get surrounded by towers, has your property value gone up or down? Has livability gone up or down? Like, I do think there's some real impacts here. And I also think that, there is going to be some heritage homes, or which probably could be heritage homes, are going to get knocked down for this period. And whether that's right or wrong, that's up for discussion, because there's a lot of heritage homes in Sydney. So if we lose a few, does it really matter? That could be one argument. The other one could be that losing any is an issue. And so it's a big question, but I think it's council driven. I think you've got to be looking at each individual area and thinking, and how are they going to play it? Because some are, I guess, embracing it, and, NIMBYism isn't strong there. And then some NIMBYism is much stronger and they're really fighting it.
I think this sort of tension between sort of heritage protection versus housing need is always going to be there. And it's like, oh, that's a real nice to have, isn't it? To have pretty streets, nice for some. But I think the reality is that is a transition period involved here. It could take decades. And over that period of time, you could have different architectural styles. It could end up being a total dog's breakfast, or it could be a pleasant new precinct. And so you obviously got to be, you're wanting councils to be very proactive here with their urban planning. Because there's an infrastructure lag too. You've got pressure on services like parking and schools and green space, which often aren't upgraded fast enough. And you've also got winners and losers, and certainly the change in values there. Obviously, you've got an increase. If you're sitting on a house, whether it's a heritage house that's been beautifully renovated or whether it's run down and in need of renovation, it's really just comes down to land value. And so then that's all gone up because of zoning changes. But so some people are effectively going to lose out a lot more than others. And there is a real challenge for people who absolutely love their home, who have renovated and extended, who, in a lovely area, they might have kids at a certain age that in the middle of schooling, and they're not ready to move or downsize or really uproot themselves. So it's quite a... I do recall when, for example, in Haberfield in Sydney is a heritage suburb. It was a garden suburb that was around the turn of the last century, sort of around Federation time. So lots of Federation homes there. And they were preserved. They went through a period in the 70s when a lot of migrants moved in, Greeks and Italians, and they sort of European or they Mediterraneanized a lot of these houses. But then in 1985, there was a heritage listing on the whole suburb slapped on. So then from then on, every renovation had to take it back to its Federation roots, right? So it was a really beautiful suburb. And then when the City West, or when that tunnel went through, there were streets where there was a compulsory acquisition. So there were streets of beautiful homes that have been renovated and at great cost too, because those people had to pay more when you've got a heritage item. And I couldn't believe that the state government would actually abolish houses in a heritage suburb. So it was quite a bit of a shock. So I think that there really are winners and losers in this whole thing. And certainly you could say the winners are some of the other people that might be able to move into a suburb and live close to the amenities and trains when they build these apartment buildings. But I think that this is going to take some time. And at least asked us if basically we would invite an expert. I think that's a sort of subtext here. So I think I'll put out a call out here for an expert to come along and discuss if they would like to.
Yeah, I think like a great town planner here. It's a great little idea, and I think we should explore it as more and more of the council's responses to this. I mean, ABC, you got to be a bit careful with their reporting sometimes around property. They do get a bit sensational in terms of their way they approach things, but they did an amazing thing on a little video on YouTube I watched just a few weeks ago. I don't know how I stumbled on it, but it was talking about the development boom in the eastern suburbs, and it's a once in a generation change. And there were some agents that are profiting massively off it because they're combining houses together, they're shifting them off to developments, and particularly around places like Rose Bay, Double Bay, and Edgecliff, etc. There, and there was the one who's the loser there was actually a family that had a heritage house and they couldn't sell it to developers. So all around it's going to be high density. You're going to have this little heritage house in the middle, and and they don't want to move, and they can't really sell it now because why would you want to buy it when you've got these developments coming? And so, I think it's a real issue that when you blanket come in and say, hey, just rezone everything within that area because you're trying to do it across the whole state, there's going to be things that just don't make sense for local communities. And so I sort of sit on Ku-ring-gai Council with their thoughts of like, well, okay, we get we need to build more. We get that we need to have our fair share. We can't just say it's all about, Western and Southwestern and Northwest Sydney are just going to take the brunt. We're not going to do anything. But, let us have, a bit of thought into the community and what's actually going to work. And we'll try to, still, produce that amount of new dwellings, but we'll do it in a different way rather than a blanket approach. It's a very big topic, and it's one I'm tracking really closely because I do think it gives us insight into the way that Sydney is going to evolve as it grows as a city. I mean, even in your neck of the woods, Veronica, I mean, the Balmain Leagues Club has been is a constant fight. And even today it's, on the SMH as a big story because, when things are, it's not what people have experienced in the past. There's a lot of fear of change, and I think people just don't want to lose the livability, but they also now know that they have to come up with solutions for the next generations because it's just not sustainable.
And I think that's a classic example of a site that is begging to be developed as opposed to knocking down 3 heritage homes to develop, So I think that honestly our focus should be, and this is where Kringo's, I guess, coming in, and they're potentially being a lot more strategic about, well, what types of buildings are there in our area? What areas would profit from being redeveloped versus others that would be better off to be left alone? And I think that there's certainly a big argument for being a lot more careful around that. Looking at those repurposing industrial sites, for example, that really where the land is not, that's not the highest and best use of the land now. So where a lot of that has changed, and that's really where the focus should be, rather than this blanket, right, well, you're within 800 metres of a train station, so therefore, you should get mowed down. I think that's taking, it's a sledgehammer as opposed to a scalpel.
And I think they've just spent so much money on light rail, metro in particular, that, every station's cost billions of dollars, let's call it. They want to basically say, look, it was worth it because we basically created all this, and it's such an amazing train. But, at every one of those stations, a lot of people are living, right? And it takes people off the roads, and it actually makes that investment sort of the ROI on it much higher. And I don't know whether the governments capture that, that value of capturing, they put the station in, and then the people owning the land gets a lot of that value because they're selling it. And we've done episodes on that in the past of where the profits really go, and maybe not into the state government's hands, into the actual land bankers' hands. So it's a great question, and I think you're right. We need to get a guest on.
So please, and in the past, when we put a call out, we've had some really great suggestions. So
that's true.
Put it out there. All right, our next question, total change of topic, really. Hi, Chris and Veronica. This is from Mitchell. I own land and am finalising plans to build a house. When building a new home, what things should you consider to maximise resale value or even rental value? Outside of location and land size, what makes an A-grade property?
My first question for you, Mitchell, is every part of the country, has different markets, right? And so what you want to be doing is thinking, well, yeah, what do we need as a family? Yeah, that's great. And, that's good, but you won't live there forever. And at some point, you probably will sell it. And I would probably be wanting to sell it into that future market, right? And so what would that future market really desire? So, if you're really going for, the affordable part of the market, then maybe you don't need all the top finishes, and you don't need to spend, because maybe you're just not going to be able to ever get your money back on that but if it's maybe more the aspirational family market, and maybe the suburbs gentrifying, and you might want to build a little bit more than what current market wants because it's moving into a more affluent suburb. And so you've got to be really, I believe, really undercapitalizing or overcapitalizing, it can change over time. At the moment, it might feel like you're overcapitalizing because you're building to a higher spec, but the market then desires that, then you'll capture that rather than building for the current market and then going, oh, it's nice, but I'd probably prefer if it had a second bathroom or if it had extra parking or a garage door and versus just a carport and etc. So that would be probably my suggestion, Mitchell. It's very hard to sort of do it for the future market because it's never guaranteed. But ideally, at least suiting what the current market wants. And if you want it and the current market doesn't want it, you've got to really question whether that's a good use of money because it's very easy to overcapitalize. I can put my hand in the air and say, I've learned that lesson the hard way.
Yeah.
So you're thinking about things the right way, Mitchell, already because you're already thinking about what's going to maximize your resale value, and not so much thinking about you really want a TV room that, to have your golf machine in.
Yeah. I do come across a number of properties where you can see that the owners have really renovated or built it for their own sort of individual needs rather than thinking more of that sort of multifaceted buyer appeal. So you got to think who's the buyer there now, who's likely to be the buyer in the future, as Chris is saying. But if you can appeal to, a downsizer, for argument's sake, as well as a first home buyer, because that's possible in some markets, as well as an investor, then you're broadening out your marketplace, right? I think too, and it sounds like you've already bought the land. So if you haven't, though, I'd be thinking, please avoid areas of ongoing supply. when you can see lots of greenfield sites and potential for more subdivisions, then that's something that's really going to impinge on future capital growth. So therefore, you're always better to try to look for infill sites. And when it comes to sort of finishes as well, there's, a couple of things to avoid, like fads, black taps. Like, I just can't stand, things that really, really date stamp a property. So go for much more, you don't want to go boring finishes, but you certainly want to go neutral sort of classics. But there's some real practical stuff like design and functionality, well thought out layouts. Good natural light, the flow, the way that the floor plan works, and quality finishes that are appropriate to your marketplace. And you got to, and I think too, if the owner occupiers want to live there, your tenants will want to live there as well. So you sort of kill two birds with one stone there.
Yeah, for sure.
Street appeal, you want to make sure it's appealing from the street. Orientation, there's ideally also you're looking for solar access, you're looking for energy efficiency and sustainability. I think these are things that are going to matter in the future. And we've done episodes on this. So you absolutely want to be thinking about that. Because as time goes on, those energy efficient homes are going to be more valuable. And I think today, we're still working on buyers to understand and value those differences, but that will become more of a feature in the future. And I think too that, flexible floor plans, just something that allows for value add down the track if necessary. I wouldn't worry too much about that because all that comes down to is the size of your land as well and how much money you've got now to build on there. Like, for example, if you only can afford to buy a single level house there, but the land size really could accommodate a bigger family, then just be thinking about the future. And even potentially, it depends on whether you're buying a house and land package or whether you're getting designed and building yourself. Sometimes you can think, okay, well, I know that potentially somebody could come along one day and put a second story in there. So sort of think that through as you do, your design now. So there's some of the things that you could be thinking of now for the future.
And I think it's probably just, Mitch, we're getting out and seeing what's going off like a frog in the sock in your suburb. What are people going nuts for? It might not be your style. We've all got our own, what we like and don't like, and, your preferences and what you think's cool and what other people think's cool. But what do the masses in that suburb think? What do they love? What do they just pay extra for? And the community that's the strongest buy there, and particularly if we're a big multicultural country and certain suburbs are dominated by lots of different nationalities around the world, and you may not be that nationality. And so, you might want to be, obvious blind spots is you basically don't target that market because you've got carpet where you need tiles and you've got etc. And so you've got to be really aware of that. I've seen this go wrong multiple times when clients have tried to go from I'll buy an asset and hold it to I'll buy land and I'll do duplexes on it. And I've seen clients do really well there. Absolutely. I can think of a client down through Rule who made an absolute killing. And timed that to perfection, bought the land cheap, built really well, and sold it at the top of the market. And so, but I've also seen it go wrong so many times. I maybe got a mate doing one at the moment in the north of Sydney, not upper north, and doing a duplex, and it's a nightmare. It's just, it's basically going to lose money, and they're just like wanting to do everything they can to just get this thing done. And so, and they've got a particular buyer pool in that market that they're having to renovate, and it's about trying to have a cheap product out there, in fairness, and they're having to really cut back and make harsh decisions all the time. And they're like, well, this is not what I want to do, but I feel like I'm actually wasting money if I don't do that. So you got to be really careful. So it's a great question, Mitchell, and you're obviously already thinking about it the right way by asking the question.
Our next question is from Phil, and this came via the website too, and he's left us a message. So we love it when people use these.
Hey guys, my name is Philip. I heard you say that the expensive stock, being 3-bedroom apartments, are being bought by first-time buyers. But last I checked, the Help to Buy scheme is capped at 1.3 mil. Doesn't this mean first-time buyers actually will be buying these more expensive stock? Good to hear from you. Thanks.
I don't know if it's Phil or Philip. You said Philip on the message, but Philip on the audio. So hi, Philip. I don't know if I'm not sure exactly where we said that. And if we have said that, I'm not sure if we meant it that way, and apologies. I think you're right. Because your question's exactly right, that we do believe that, not every first home buyer is going to have the budget to purchase at these price points, but absolutely, 3-bed apartments, absolutely will be bought by first home buyers if they've got the budget for it. And, a lot of first home buyers do have budgets that surprise a lot of other first home buyers.
Yeah.
They've got intergenerational wealth, even under, 5 times borrowing capacity, circa, 1.3 mil, for example. And, with the government change, well, not change, but the Labor win last week, and the change to limits around the 5% deposit scheme from January next year, that's going to bring enormous demand to the sub 1.5 million market in Sydney, and things that suit first home buyers, because a lot of first home buyers are entering a lot later than they ever have. They enjoy their 20s, and then they got, I better get saving, and I'm coupled up and a kid's on the way. I've already got one, and absolutely they're looking to future-proof themselves. And so if they could get a 3-bed apartment, or even a bigger 2-bed apartment, that'll give them, 5-7 year runway with even multiple kids, they absolutely will buy them. And so I think it might be a bit of a miscommunication there. But also, I guess it's, if we're talking more the affluent area of Sydney, where the house prices are maybe double or triple that, you can see that these apartments, I believe, will grow, just as good, if not better, than houses, because they've got a really strong demand behind them. But if they're in other parts of Sydney, where you can get houses at similar prices or townhouses, I'm not sure whether people would want to make those compromises.
I think it comes down to location, because the simple fact is that in Sydney, in inner Sydney anyway, you're not going to be getting 3-bedroom apartments for 1.3 or even 1.5 million. And definitely not brand new. You're not going to get them. They won't exist. So I guess what we've always talked about is that currently developers are favouring building that more expensive stock, which is the larger stock, because they're actually getting a better return on that, rather than your typical apartment builder who was, loading it up with 1 and 2 bedrooms when they're really targeting investors and first home buyers. So I guess that's what we were talking about, that typically currently the developers really, it's not stacking up to provide a lower cost accommodation. That's really where we were coming at there. But we totally agree with you, Philip, that if the first home buyer has got the budget and the availability there is of 3-bedroom apartments, then that does give them a much longer runway than if they were going to buy definitely a 1-bed or a 2-bedder. And so I think it's a great opportunity for first home buyers in the right area. You've got to be very, very, very careful with off the plan. And in your first home buyer guide, Megan and I have done a number of episodes on this particular topic, because that's a highly risky segment of the market. But if there aren't a lot of 3 bedrooms around, that scarcity is a good thing, and they are needed. And so, yes, we think that those first home buyers might have a great opportunity with those increased caps as well. All right. Our next question, we're back to analog here, where they type these questions into us. This is from Sunil. In the accumulation phase, if one focuses on capital growth, wouldn't that erode their borrowing capacity and lead them not to buy more properties? Wouldn't it be better to focus on rental yield with low capital growth in order to protect their borrowing capacity and buy more properties?
It's a great question, Sunil. And I think the key answer to this question is actually understanding what drives borrowing capacity and understanding just how much what you believe is your higher yield is going to increase your borrowing capacity. And I think that a lot of spruikers, I would call them, absolutely spruikers, perpetuate this, that it's very easy just to leverage up, buy one property, it's paying for itself, buy another, buy another, buy another. It's just not the realities. And unfortunately, you can get capped out really quick, no matter if you're going for capital growth or you're going for a higher yield. The differences in what you can purchase, the market exposure, isn't as much as you believe. And I can give you the sort of the easy way to think about it, right? So let's say you buy $1 million of property, and you say a capital growth property gives you a 4% yield, which is 40 grand a year, right? Whereas you buy $1 million worth of property and it gets a 6% yield. Let's say it's a really high yield and you can get 60 grand a year. So that's buying $1 million of property both ways, but just one's buying more higher cash flow, one's buying more of a lower cash flow rent. And we believe that the 4% yield one's got better capital growth potential because of scarcity, and the 6% yield maybe doesn't because of where it's located, right? The first thing you got to just think about here, because to get higher yields, you probably got to buy cheaper and you got to buy more of them. just be aware really carefully of maintenance costs, because you got 2 roofs versus maybe an apartment.
Wow.
You've got everything on a property, maintaining those properties. And so you do need to factor in higher maintenance costs, which already wipes out some of that yield. I'm not saying, let's say that it's a rental crisis across the whole country. So let's say you don't have any issues with vacancy, but often you do in these situations. You have issues with vacancy, particularly if you're going to buy in an area for high cash flow properties where a lot of other spruikers are buying, and a lot of more rental stocks getting created. So just be aware of that. Maybe rental growth isn't as good as well. Maybe in 3 years' time, the $800 a week's gone to $900 or $950, but you're still stuck at, $60,000 a year or $600 a week across those other ones, right? But putting all those other things aside, because there's a lot of things where you can get it wrong on those levels, and I could keep going, just based on the yield itself, 60K rental income versus 40K rental income, most banks used to only use 80%. Some will use 90% now. So let's say you can go to a bank that will use 90% of rental income. That 60K is reduced to 54 versus 36, right? So when a bank puts it in the calculator, they will say your rental income on the first strategy is 54,000 versus 36,000. So it's an extra 18,000. And at the moment, you can borrow about 5 times income. So you could borrow 5 times 18,000, so about $90,000. So yeah, if you think that you can get better, more properties, but really your budget's really $1 million versus $1,090,000. Like, it's not much difference. That's buying $1 million of property. If you buy $2 million of property, it's maybe $200,000. So maybe you could buy, if you bought 2 $1 million properties, you could maybe buy 7 $300,000 properties if you wanted to go for yield. It's not that much, and it's a big misunderstanding. The thing that allows, and all the spruikers won't tell you this, and this is just being real, the reason they've got massive portfolios is because they're selling a lot of properties to their clients based on the belief that the reason they've got so many is because they're selling buyer's agency services, which is giving them big taxable profits on their income. And then they're using that income to leverage to buy more properties. And then that's allowing them to keep on building their portfolio. You need a really strong income. You cannot just do it based on no income. Because in this situation, if you got an 18 grand pay rise, that would offset the 18 grand extra income. So it's the same thing. So, but I get where you're coming from, Sunil. It feels like that's the right answer, but the other problem with yield as well, just to be honest, that 60K versus the 40K, that 20 grand on your tax return is fully taxable. So if you're on the middle, the 40 or 50% tax rate, in your hand, you're only going to get 10 or 12 grand more. It's not 20 grand because you have to pay tax on it.
I'm on a personal mission to help more people make better property decisions. Most people don't realise that they can cost themselves hundreds of thousands of dollars over the medium to long term when they make property decisions without all of the information that they need. And what I do is help people with tricky real estate problems, which often masquerade as simple questions like, should I sell my investment property because the interest repayments are hurting? Or should I buy before I sell? Or the other way around. You can connect with me and access all of the tools that I've created to help you make better property decisions at veronicamorgan.com.au. And there you will find resources for first home buyers, details about my buyer's agent mentoring program. You can connect with my Sydney-based property management and buyer's agency teams, Australia-wide vendor advocacy, or ask me for introduction to the small group of buyer's agents that I would personally recommend across the country. That's veronicamorgan.com.au.
If you're looking to buy your first home, thinking of upgrading to a new one, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and, importantly, get the finance right. Reach out via my website, alcove.com.au.
So I think the problem is, of course, yield is now and capital growth is future, and it feels like it doesn't really exist. And it's really difficult to put your faith in something that doesn't sort of feel like it's going to exist. And certainly capital growth works on building your equity. It's a real set and forget. I mean, you do have to maintain properties. You do have to actually look after your investment properties. But in terms of the mindset, you've got to choose your asset, choose it really well, and let it go. I'm actually putting together a presentation for Uni of New South Wales Students Association, and because a bunch of them want to buy a property, and I chatted with one of the fellows that's organising it, and he was saying, I really want to talk about hotspots, and I'm like, yeah, but you guys have got potentially a 40-year runway. Like, you would be totally blowing that if you go for yields and you go for hotspots. If you go use short-term decision making when really you've got this amazing opportunity via compounding to, if you can buy a good asset now and able to hold on to it for 40 years, like the difference. And when you look at a difference of compound capital growth rate of like even 1% per annum over 40 years, we're talking millions of dollars, even on a purchase price of like 700,000, 600,000. Like, it's unbelievable compounding, and it blows our minds and makes it really difficult for us to wrap our head around this. And also there's this belief, I guess, that all property goes up in value and at the same rate, and that really needs to be interrogated. So I think that this idea of more is better really has to be looked at with a lot more scrutiny. So you can sort of blow apart the argument that by having more and having higher yield that you're going to be able to afford more. So, but even if you can afford more, one of the biggest, saddest things I come across is when hearing about people that do actually have a high income can actually support having a really good portfolio with a small amount of properties in it, but instead they go this volume strategy and they end up with heaps of really shit assets with higher maintenance costs, with much more issues, a lot more issues with tenancy risk as well, because of the lower socioeconomic areas that they're often buying in order to be able to get this multiple strategy going. And I guess to be able to have that long-term focus and think, no, I'm going to go quality over quantity. I've got the income that can sustain the cash flow deficit in those early years, and the ability, the mindset to be able to withstand the quantity versus quality brags at the barbecue, that's really what you need long-term. So I think it's a great question, and I think Chris is always a good person to answer this because, of course, he's on the borrowing side. But if anybody does want yield, I mean, there are other ways to build yield into an investment portfolio, Chris, right? You don't actually have to invest everything in property. So having a balanced portfolio and investing in other assets can offset that. If you've got one really good property, for example, and invest elsewhere for yield, correct?
Yeah, absolutely. And I think there's a massive rise in commercial investment, particularly when you've got big deposits. And, that can keep on borrowing. And basically, as long as you've got the deposit and the property will wash itself, maybe commercial properties and that's where you're potentially going to get yield. And maybe you can increase that yield with longer leases and better leases and improve the value of the property and then increase the capital value as well at the same time. I mean, I think there's been some very successful people who have done that. So, yeah, I think you just got to be really careful chasing yield and just saying, I'm going to accept lower capital growth. May not just lower capital growth. You may get no growth. Or maybe you might get taking on risk to get that, actually losing money on property. I think obviously a lot of people have done that in the apartment market. The issue I think at the moment, which is hard to get your head around, is that the bottom end of the market has had its day in the sun because they've compressed borrowing capacities and investor boom. It doesn't feel like it when you're in the capital cities. A lot of investors are buying, but a lot of investors are. You can see it through lending data. And they're buying in the regions because yield is important because they can't sustain high negative cash flows because interest rates are high. And they have to go there because their borrowing capacity is really tight. You only can borrow 5 times income. So they go, I can only spend, and they don't really want to buy expensive investment properties because it's a big risk. It feels really risky when mortgage rates are high. And so all this sort of time is you've got all these, and they've also in those areas, you've got FOMO created because the investors in there and the first time buyers in there as well. And particularly in regional markets like Adelaide and Perth and, now Darwin and Townsville and also you've got investor in those markets, the number of buyers agents acting in there all together at the same time. It's really like a pump and dump. And unfortunately, the investors in there think, I'm getting great capital growth and I'm getting great yield. It's the holy grail, but it hasn't been tested in different markets yet. And I think it's just the day out of the sun is coming.
That leads beautifully into our next question, which is from Suzanne.
Okay.
And she says, is there such a thing as long-term positively geared property that costs less than $600,000 in this current market? Or is it the reality that investors should expect to pay more than $600,000 to gain a quality asset? How do you select a property in a hyped up market, for example, Perth, knowing that this market is likely to slow down in growth in medium long term? And It's a really good question because honestly, it seems to be the most popular price segment for both first home buyers and investors is $600,000. Everybody you talk to, every borderless buyer's agent you talk to, and obviously first home buyers as well. So I would suggest, as Chris was just alluding to, that under that price point, you're not getting huge amount of value because you've got a really inflated market in a lot of locations, a lot more buyers than you would normally have under that $600,000 mark.
Yeah, I think it's maybe a little bit late to the party, Suzanne, and maybe it's kind of that you don't want to be the one carrying the property right now as potentially, and I'm not saying those markets there's a bit of tailwind across the whole property market with lower interest rates, which might protect those markets a little bit and
For a
make
while.
make them more affordable for locals because
Uh.
borrowing capacity goes up and, etc. But, if investors, there's too many rentals on the market, then all of a sudden rents start falling, right? And then maybe investors start bailing, and then all of a sudden you've got some more properties on the market, and people go, well, there's choice now. Maybe there's no rush. And then the owner-occupiers sit on their hand because prices are falling. And I think there is a story there, which I'm just going to be interesting to see sit on the sidelines the next few years and watch that. Look, I think the problem with your question, Suzanne, this is not a shot at you at all. It's just a positively geared property is you're kind of going in with the wrong mindset. Residential property is an investment that you're trying to make money through capital gains, not through making money in rents. I mean, it's kind of been the theme of today's episode. Not on purpose, that we're talking about yield and tax on yield and rent and things like that. So really where you make your money on property is the capital value, which often comes from the land value, becoming more scarce over time, and the buyer pool increasing, and then that pushes the land value up. And so, going in, you probably want to have a different mindset. Okay, well, I'm happy to have a negative cash flow because I know I've got a really strong capital growth asset, and that negative cash flow is tax deductible. And I know that over time the capital value should go, and maybe the rental should go up as well because I'm buying it in an area where there's not a lot of other rentals, and it's a good property, and it's dominated by owner occupiers. And as more and more people can't afford to buy, it's a great little place to rent. And over time, they become great places to get more expensive, and then investors stop buying them, more owner occupiers buy them. And so what might have been a market where there was 60% owner occupiers, 40% investors when you bought it, 10 years ago, it might be dominated 80% are owner occupiers now. Very few investors play in that market. And so every year, more owner occupiers are buying rather than investors. It's getting harder.
I will say, though, there are some markets, some very established markets, where the balance does tip in favour in terms of more renters living in them. So I'll give you an example, like Potts Point, Elizabeth Bay is a really good example. But the people that have invested there bought decades ago. So it's not like you got new investors buying in that area. You've got a lot of established money effectively in that area. So every different area, there's a lot of different things that will change the makeup of those areas. And I certainly think that I would always encourage anyone who's thinking about investing, it's like, you got to think, why do you want to invest in property? And if you're sort of thinking that you want to buy for positive cash flow or positive geared, you've got to go and educate yourself a little bit more about what makes a good property investment. As Chris was saying, that the property works because you can leverage, and it's a long-term capital growth play. That's why it works as a good investment, right? And obviously there's tax arrangements in country that support that. If you're not looking at it in that way, you got to start thinking about investing in something else. If you really are so strapped for cash that you can't afford in those early years you can't afford you don't have the spare cash flow to fund the shortfall, then you're going to be reduced to buying a lower price property that often comes with location or quality trade-offs that really hurt that long-term growth, and you don't actually achieve what you wanted the investment to achieve for you, and you've taken all that risk and borrowed all that money to no avail. So I think that that's a real risk when you're coming at it in this way.
Yeah, I won't put my head out. I could get chopped off because someone was like, no, that's not right. That's not true. My go on Potts Point, as an example, it's a suburb where you've got a lot of beautiful, bigger, premium apartments. And I reckon they are absolutely performing unbelievably well, and they suit the downsizer market to a T. They suit the high income couples, same sex couples, couples without kids, even young families. It's just a great place to live. Access to the city, water, train station there, and then I think you've also got another
Tiny
element
studios that are horrible.
studios. Yeah. And I think it's one of those markets, and that's where a lot of the renters were probably living, to be honest.
Oh,
uh,
no, there's a lot of rents at very high-end rents there. There's
Yeah,
a real
okay.
mix. There is a real mix, but there's also in the middle, you've got lots of lovely little Art Deco apartment buildings, for example, a lot of them company title, that have got small 1 and 2 bedroom
Yeah.
apartments that are lovely apartments, and a lot of those are rented. So, but these
Yeah.
are old buildings that have been, often in the same family. It's just a different makeup of a suburb, that's all. But what I'm
Yep.
saying, what I'm really talking about, you're talking about people who are buying into an area, and I'm sort of talking about fundamentally what supports that area is who owns it, who owns the properties there, and are they ever going to be under financial stress to have to suddenly bail out at some point or another? You know what I mean? Like that you got that financial stability of the core ownership of, if you like, of a suburb. That is what's going to underpin a suburb's value over time. And obviously, if it's desirable, there's lots of other things that go into that. But if you're in an area where a lot of the people are bought in recent years, and then they might all be under financial stress at the same time if rates go up, for example. We've seen this in some areas or first home buyers can be really priced they can be put in a situation where they've got to sell. If costs get out of hand, and investors often will bail if costs get out of hand as well. So if you've got a lot of people that are bought into an area in the same time period that are sort of a similar demographic, that's a much more volatile and it's a risky area versus an established area.
Oh, I think that's definitely the story with a lot of investors buying in the last few years, because if you have a thought that maybe if I don't sell now, I'm going to regret it because I bought a 500 and it's 650 now, and you start to see, actually now it's only worth 600, you're like, God, let's get out of here, right? And then all of a sudden, there's 10 properties on the market, and you have to take a 550, and then you want to hold on, and then you basically get stuck with all these dogs, basically.
Yeah.
And that's the reality. I think who owns the properties underneath them is a really important point that a lot of people don't remember. And I think, we've absolutely seen where that's, in the owner-occupier space, you've seen a lot of house and land packages, thinking about places in Perth that were under for many, many years. Maybe in Melbourne and Sydney and even Brisbane, house and land packages, maybe it hasn't happened as much, but it has happened in the apartment markets in those areas. You've seen a lot of investors in the Melbourne and Brisbane apartment market that, had to sell at losses every, few months. Pain and gain report proves that. And, as soon as they get to a point where they can potentially walk away and feel like they've never lost money, they sell as well. So there's this constant people wanting to get out, even if they can't get out right now. And as soon as there's a bit of price growth, they all want to bail. And so, that's a really big point.
It'd be interesting to watch Darwin, because Darwin was still featured
yep.
very high in the last pain and gain report. And now, now all the investment advisors are all pointing to it. So that's going to be an interesting to watch. And I think we want to avoid hyped up markets. Eventually they all turn. Remember Hobart. Hobart was only, say, 5 or 6 years ago. Everyone was banging on about Hobart. Well, no one talks about it anymore. It's been in the doldrums now for, a fair amount of time. And so following the crowd is always dangerous, and not understanding those local supply, the pipelines, the demographics, and the real demand drivers of the local area, particularly when you're buying outside of your. I mean, I'm not recommending home bias when you only buy around the corner, but at the same time, at least you've got a chance of knowing and understanding your local market, whereas buying remotely is really difficult. And I think too, we just want to remind people that long-term absolutely matters. Short-term gains are really irrelevant in the whole big picture of investing in property. So therefore, we would just say, please don't invest with that aim of positive cash flow, certainly not immediately. You want that in 40 years time. Well, you'll get it well within 40 years, I would think. But you want to have a long lens on that one. Our final question is from Brandon. We are a 40-year-old couple, or couple in their 40s, I'm guessing he means, with 3 kids, 11, 8 and 7, financially stable and able to save quite well, but have been priced out of where we've built our lives around. Is rentvesting a viable way forward, or should we look at ownership?
It's a big question. I don't because you've got a lot going on here, and from a family point of view, and you've got schools, you've got 3 kids, you've got, it's not easy for you to rent. May or may not be, depending on where in the country you are. But your finance, your what you need from a property is a lot bigger than, say, just a couple rent vesting. And it's easy to rent an apartment, and you can have a 1-bed, a 2-bed, a studio, and it's just not, you need a house probably, and or a big 3-bed apartment maybe. Even that would be tight, right, for 3 kids. And so I think it's just how viable it is at renting. I also think that your kids aren't 1, 2, and 3. They're you probably only maybe got a runway of, say, 7 to 10 years. You might have to kick the kids out, but that's there is a time frame there that maybe it's also, you could say, well, let's just rent for the next 7 to 10 years, and we'll just have to deal with that. We're on the middle end of that, versus maybe going and buying something completely out of where you want to live, uprooting all your life, uprooting the kids out of school zones, just so you can own something to live in. And ultimately, you may say, well, instead of us doing that, why don't we buy the place that we're going to live in when the kids move out of home? And we buy that as an investment property. It might be in the area you live now. And it might be like a 2-bed apartment that might be in budget, because you're saying that, 3 beds and houses might not be. And so you rent vest, and I would say, like, so for example, let's say I'm up on the beaches, which I am now. Like, if you're in a beaches couple, you might say, well, let's just rent on the beaches. Let's rent apartments or, houses if we can. And just try to get through year by year. We're going to have a bit of disruption. We're going to get kicked out. It's just going to be, we're maybe not going to be able to rent the big renovated houses. We maybe just have to, rent older houses and older apartments. And then our money and our cash is there in a nice little apartment that's down near the beach that you want to live in 10 years' time. And so, doing rent vesting to then ultimately make more money on them versus buying a home and then to take that money and then, pay capital gains tax and all that sort of stuff. I think it's a risky strategy, because if it doesn't work, you could get yourself in 10 years' time and go, oh, we haven't really made that much money. We haven't really got much further ahead. We haven't even got anywhere to live now. And all of a sudden you have to sell all those investments, and then a good apartment in an area that you wanted to live is run on you. And then you haven't got security now, and you haven't got security in your later years. So I'd probably de-risk myself and just get my future home, which might be an apartment. But also is a good investment.
The alternative, of course, is you decide to pull up stumps and move somewhere where you can afford a home that you can all live in. Now, that's not going to be necessarily the most palatable option, but it's something that has to be just discussed, at least here. Because if you decide to move so that you can live in a home that you own, and I don't know whether that means in a totally different area or whether it's 3 suburbs away. Sometimes it's 3 suburbs away, and that's something can be done, whereas going to a totally different region is something that can't be done. But certainly I think now is a good time to do it before your eldest child goes to high school. So now is the time to be thinking about doing that move and really exploring, is that even possible? There are, obviously ownership provides stability and control. There are a lot of emotional trade-offs here, and that's especially important with kids, but does come at a cost, especially if you have to establish yourself in a different area. But I wouldn't just totally rule that out straight up unless it's completely out of the question. And obviously, if you're going to then do that, you want to sort of go and check out the areas and really get an idea of property values and see whether people like us, as we call it, sort of just people that part of your community, your tribe, and whether you can actually see yourself living in an area and being part of a community in a different area, and have an open mind. We often get really fixed about the suburbs we live in. We get really a bit dogged about that, and there are opportunities that we could be looking at that would be really work for us, but we just don't look at that. Something that we do in our business a lot with people is really just make sure we test those beliefs or those limiting beliefs to say, hang on a minute, you've told us this is all the important things in your lifestyle. There are other areas that offer that, and you haven't even looked at them, right? So I think that you've got to look at that first. And then if you do decide to rent vest, I agree with Chris. I think, if you can see ahead and think, there's a good probability that we would like to live in this area and we can afford, say, a 2-bedroom apartment or even a 3-bedroom apartment, depending on what's available and what's in budget, then I think that that's a really good thing to be looking at. And then that sort of future-proofs you. I absolutely agree. All right, well, that's it for this episode of Q&A. And thanks for those questions. We really appreciate them. Love the ones in particular that come through via the website on that little speak pipe widget there. It's great to hear your voices, and we really appreciate you listening to the podcast. And as we said earlier, if you've got guests that you would recommend and think you would really like to hear us have a conversation with, then please reach out and let us know. We do follow up on those requests. Not so much if you're trying to get yourself on here, because we actually are really not interested in helping people just promote themselves. But if we can have a real juicy conversation, which is for you guys, the thinking listeners out there, that you will value, then absolutely we are all ears.
Absolutely. Thanks for listening.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.